Welcome to Echo 411 Expectations and Financial Market. Study Session 1. Nature, Scope and Definition of Management Accounting. Introduction. This lecture will introduce you to the concept of management accounting and its relationship with costs and financial accounting. It also contains importance and scope of management accounting. Objective. At the end of this lecture, you should be able to explain the scope and functions of management accounting. You should also become familiar with important terminologies used in management accounting. Definition. There are many definitions of management accounting. The Institute of Chartered Accountants of England has defined management accounting as any form of accounting which enables a business to be conducted more efficiently. American Accounting Association defined it as the methods and concepts necessary for effective planning, for choosing among alternative business actions, and for control through the evaluation and interpretation of performances. The Institute of Chartered Accountants of India defined management accounting as techniques and procedures by which accounting mainly seeks to aid the management collectively. The Chartered Institute of Management Accountants UK defines it as an integral part of management concerned with identifying, presenting and interpreting information used for formulating strategy, planning and controlling activities, decision making, optimizing the use of resources, disclosures to stakeholders, disclosure to employees, and safeguarding assets. Management accounting can be defined as the process of identification, measurement, accumulation, analysis, preparation, interpretation and communication of financial information used by management to plan, evaluate, and control within an organization and to assure appropriate and accountable use of its resources. Nature of management accounting. Management accounting provides information to the personnel that are entrusted with authority and responsibility of operating business activities. Management accounting includes financial accounting information and raw materials from several other disciplines such as costing, statistics, mathematics, political science, sociology, psychology, management economics, and law to ensure optimum utilization of all the resources. It is not a precise science as it uses its own conventions rather than standardized principles. Therefore, the inferences drawn from the facts provided depends on the skill, judgment, and common sense of different management accountants. Thus, it is said that management accounting serves as a management information system which enables the effective management of an enterprise. Uncertainty exists in all business situations, and the information supplied by the management accountant must reflect the uncertainties and variableness of the situation. An important part of the evaluation of alternatives is concerned with the assessment of risk and uncertainty. Therefore, it will be misleading to present information for decision-making purposes which ignore possible consequences of such matter as competitors' actions, inflation, imperfect forecasting, interest and finance charge, new government legislation, possible material and labor shortages, possible industrial disputes, and all other factors that contribute to uncertainty. In appropriate circumstances, formal decision rules that can be useful include expected value, maximin, maximax, and minimax regret criteria. The management accountant must be totally familiar with a range of concepts and techniques including the determination of economically relevant costs and revenues, the use of various formal decision rules or models, the use of probabilities in decision analysis, the construction of decision trees, the use of cost volume profit analysis, resource allocation using linear programming and simulation. Nowadays, much of the routine aspects of management accounting is done by computers. Functions of management accounting or accountant. The purpose of management accounting in the organization is to support decision making by collecting, processing, and communicating information that can help management plan, control, and evaluate business processes and company strategy. The management accounting functions include the following: collection of data. The management accountant has to collect data about the problems faced by the management through primary and secondary sources. The management accounting system modifies the data furnished by financial accounting to serve the managerial needs. Analysis of data. After the collection of data, the management accountant has to analyze it for the purpose of interpretation using various tools and techniques like marginal costing, budgeting, standard costing, and so on. Presentation of data. The management accountant is required to present the data to the management in columns and rows to facilitate proper understanding. Reporting. Management accountant needs to prepare different types of reports periodically and communicate to the concerned departments to meet the requirements at different levels of management for necessary action. The collected and interpreted data must be communicated to those who are interested in it or to whom it has some meaning. The communication of the data should be done within a reasonable time. Data delayed is decision delayed, and a delay take two. Data delayed is decision delayed, and a delayed decision may delay the prosperity of its concern. Decision making. The management accountant has to assist the management in taking realistic decisions through analysis and interpretation of data that suggests a particular course of action with the help of various tools of management accounting. Scope of management accounting. Management accounting is a wide and diverse subject. As stated earlier, it includes some elements of other branches of knowledge such as psychology, sociology, economics, law, political science, mathematics, statistics, financial accounting, and cost accounting. It is thus very difficult to define its scope, as it is dynamic and ever-growing discipline of knowledge. The important techniques and systems used by management accounting are briefly stated below. Historical cost accounting. Maintenance of books of cost accounting enables to know the actual cost incurred by the firm. Standard costing. Take two. Standard costing. The predetermined costs laid out by experts are compared with the actual cost in order to know the deviations. Marginal costing. Costs are divided into fixed and variable elements which help in making vital short-term decisions. Financial planning and policies. It consists of raising the long-term and short-term finance and invests it on optimum basis and enhances the profitability of the firm. Investment appraisal. The large amounts of future capital expenditure and future costs. Take two. The large amounts of future capital expenditure and future cash flow are analyzed to take important decisions. Break-even analysis. This is an important technique which has take two. This is an important technique which is used to analyze the behavior of costs, fixed and marginal, in relation to the level of activity. inter-period comparison. It is a technique of comparing the present performance with the past performance. Forecasting. Some techniques like decision tree, probability, and sensitivity analysis are used by government accountants for forecasting, which forms a basis for planning. Other techniques employed are data processing, project management and appraisal, management audit, efficiency audit, cost audit, performance budgeting, tax planning, social accounting and audit, human resource accounting, responsibility accounting, and divisional performance. Management accounting and financial accounting. Accounting may be broadly classified into two categories. Accounting, which is meant to serve all parties, both internal and external, to the operating responsibility of the firms, and the accounting which is designed to serve internal parties who take care of the operational needs of the firm. The first category, which is conventionally referred to as financial accounting, focuses on the interest of those who have financial stake in the organization's affairs: creditors, investors, employees, and so on. On the other hand, the second category of accounting is primarily concerned with providing information relating to the conduct of the various aspects of a business, like costs or profit associated with some portions of business operations, to the management. This category of accounting is called management accounting. Financial accounting and management accounting are two interrelated facets of the accounting system. They are not independent of each other, but they are dependent. Take two, but they are interdependent. Financial accounting provides the basic data, which are analyzed and interpreted suitably and in the required manner by management accounting. Although there exists some close relationship between financial accounting and management accounting, distinction is always drawn between financial accounting and management accounting, since they differ in their emphasis and approaches. The main differences between management accounting and financial accounting is summarized below. There is no realistic dividing line between cost and management accounting, particularly with regard to the provision of information to the management for planning, controlling, and decision making. Cost accounting involves the process of classifying, recording, and appropriate allocation of expenditure for the determination of the costs of products or services. Cost accounting will tell the management as to how the business has fared at each stage of operation. But cost accounting will not tell them anything about the future policy to be adopted. It is here that management accounting differs from cost accounting. The aim of management accounting is not to collect information as such, but to utilize the information collected in order to help the management to formulate their future policy and to make important future decisions. Though there is a difference between management accounting and cost accounting in the objective, yet their functions are complementary in nature. Management accounting depends heavily on cost data and other information derived from cost records. In one way, management accounting is an expansion of cost accounting. Cost accounting deals primarily with cost data, but management accounting involves the consideration of both costs and revenues. It is a broader concept than cost accounting. It not only reports costs, but also uses them to assist management in planning possible alternate courses of action. Nature of cost accounting. Initially, cost accounting was merely considered to be a technique for the ascertainment of costs of products or services on the basis of historical data. In course of time, due to competitive nature of the market, it was realized that ascertaining costs is not as important as controlling costs. Hence, cost accounting started to be considered more as a technique for take-two. Hence, cost accounting started to be considered more as a technique for cost control as compared to cost ascertainment. Due to the technological development in all fields, cost reduction has also come within the ambit of cost accounting. Cost accounting is thus concerned with recording, classifying, and summarizing costs for determination of costs of products or services, planning, controlling, and reducing such costs, and furnishing of information to management for decision making. Cost accounting involves process that helps to ascertain cost relating to a particular period, analyze or classify costs under different heads of accounts such as material, labor, expenses, and so on. Allocate costs fully to the direct expenses or the specific costs such as raw materials, labor to the relevant products, contracts, or processes. Apportion or distribute common costs to each product, contract, or process on a suitable basis, and absorb the total expenses of a department over its products so as to finalize the cost of each product that is then reported to the management. Functions of cost accounting or accountant: determining costs and analyzing income. A cost accountant determines the cost of a job, product, services, or process as the case may be. He analyzes and classifies costs according to different cost elements, viz. Materials, labor, and expenses. Such analysis enables him to tell the management the significance of the different cost elements and fixation on the selling prices of the products manufactured by the take-two and fixation of selling prices of products manufactured by the business. He advises the management about the portability or otherwise of each job, product, or process. Thus, he helps management in maximizing business profits. Providing costs of data for planning and control. A cost accountant collects, classifies, and presents in appropriate form suitable data to the management for planning and controlling the operations of the business. He makes constant endeavor to control and reduce the cost by the following techniques. He submits regular reports to the management regarding the wastage of material, idle time, idle capacity, and so on. He identifies the causes and suggests suitable control measures to prevent or reduce losses on account of these causes. He makes product-wise or process-wise comparisons to identify non-profitable products or processes. She develops cost consciousness. Take-two. She develops cost consciousness in the organization by adopting a budgetary control and standard costing techniques. She maintains an even flow of materials and at the same time prevents unnecessary investment of materials through different material control techniques. For example, ABC analysis, perpetual inventory system, materials turnover ratios, fixation of different levels of materials, and so on. He organizes various cost reduction programs with the cooperation and coordination of different departmental heads. Undertaking special cost studies for management. Take-two. Undertaking special cost studies for managerial decision making. A cost accountant undertakes special cost studies and carries out investigation for collection and presenting suitably the data to the management for decision making regarding the following areas: introduction of new products, replacement of manual labor by machines, and so on; make or buy decisions, replacing or repairing old machines, accepting orders below cost, and so on; expansion plans, installation of new capital projects, and so on; utilization of idle capacity, and development of a proper information system to provide prompt and correct cost information to the management; installation of cost audit system. Though, like management accounting, most of the functions of cost accounting are for management, it also benefits workers and government. To the government and the owners, cost accounting helps the management of the concern to ascertain the cost and profitability of each individual product, service, contract, process, division, branch separately. This also helps in valuation of the cost. Take two. This also helps in valuation of the closing stock of goods at the end of the year. It helps the management in controlling costs, in reducing the avoidable expenditure and minimizing wastages and losses. It ensures the reconciliation of quantity of input and the quantities of output, wastages, and scrap. The management is thus able to regulate and monitor the movement of materials, thus preventing theft and loss of materials during processing and handling. It is of great help to the management in taking several decisions such as which products to produce, how much to produce, whether to make or buy a component, what price to charge or quote. Thus, cost accounting is an invaluable aid to decision making. It also facilitates the preparation of budgets and implementation of budgetary control in the organization. The end result of all the above advantages of cost accounting is maximization of profit of the concern, thus benefiting the owners by increasing their net worth or the share prices, higher dividends, and so on. To the workers, cost accounting has an elaborate system of assessing the performance of workers and rewarding them suitably through incentives and bonus. The increase in profits due to a cost accounting system also leads to higher remuneration and bonus to the workers, to the government, consumers, public. In case the products are under price control, cost accounting furnishes the data required by the government for fixing fair prices. Consumers benefit since the prices fixed on the basis of the cost data are just and reasonable and cannot be too high. It also leads to efficiency and productivity in the industrial sector. It ensures optimum utilization of the scarce economic resources of the country. Cost accounting leads to maximum profits for an organization. Naturally, the government also gains by the way of more taxes on production, income, and sales, and so on. The higher revenue is used by the government for public welfare and economic development. Summary: management accounting can be defined as a process of identification, measurement, accumulation, analysis, preparation, interpretation, and communication of financial information used by management to plan, evaluate, control within an organization and to ensure appropriate and accountable use of its resources. Management accounting makes use of information from financial and cost accounting to ensure optimum utilization of all the resources The important management accounting techniques include standard costing, marginal costing, absorption costing, decision costing, break-even analysis, and budgeting. This is the end of study session 1. Thank you.